In this video, I'm going to show you the 5-step process to taking perfect trades. For the topic of today's video, we're going to use a trade I took recently on Euro GBP. This trade ended up being a 10.5 hour trade, and the reason we're going to use this as our example is because, in my opinion, it ticks all the boxes for a perfect trade setup. So let's get straight into the process and I'll show you how to find perfect setups. Step number 1, we want to identify structure on the high time frames. So looking at Euro GBP, then we can see here on the 4-hour time frame that structure is bearish from this point. We had a huge spike to the upside, we've come down, we've broken structure at multiple levels here, lower low, lower low, lower low, lower low again. But here we can also see that the last lower high in the trend has now been broken by this structure, which has pushed us to the upside. So what this tells us is that there is potential reason for the market to move higher because we've gone from these lower lows and lower highs into a series of now higher highs and potentially forming a higher low. And that leads me into the second step to catching perfect trades. This is going to be looking for imbalance and liquidity on the higher time frames. What we want to do now is find the magnet areas that price is likely to be drawn into. And the way we do this is by using imbalance. Now, for those who don't know, imbalance is a concept I use where we are looking for the big open spaces in the market coming out of supply zones or coming out of demand zones. So by marking up this 4-hour zone up here, which is a supply zone, we can see we have this deep imbalance running into it. So what I would now do is mark this as an imbalance, and basically the idea that this gives us is that the market is likely to at some point go and fill this imbalance space, trade into this supply zone, and then from there maybe the trend will reverse. But what this does is actually sets us up with the basis for a trade, because now we know we have this open space above and this supply zone that the market is going to draw into. So the second step of looking for the magnet zones is going to include liquidity. We are looking for liquidity. Imbalances, we are looking for imbalances, one of the primary things, and then supply and demand zones. At the top or at the bottom of every imbalance move, we are going to find a supply zone or a demand zone, okay? In this instance, it's a supply zone, which kicked off this big downside move, kicked off this new bearish trend, and now that the trend has shifted back to the upside, we can look for reason for this to be filled. So by this point, we have an idea, okay? We've seen from the high time frames that the market has this open space above and this zone that it's likely to fill. We can also see that the structure is pointing to the upside. So what we want to do now is kind of go a little bit lower and zoom in and kind of identify using the structure on the lower time frames if there are going to be opportunities to trade through the imbalance into the zone using what we found on the high time frames. And that leads me on to the third step for the perfect trade, and that is going to be identifying supply and demand, liquidity, structure, and inducement on the lower time frames. All of these things combined are going to allow us to find the perfect opportunities to get into trades and then obviously out of trades using the higher time frame picture we collected earlier. So what you can see here is I'm looking at the 4-hour time frame. As you can see, I've marked on this demand as well. So this is actually a good point to mark because we can see that after the structure broke, that imbalance there coming from this demand has now been filled. And following on from that, what do we have? We have some breaks in structure. So what we're going to do now is go down to the 1-hour time frame. This is going to be the kind of lower time frame that we want to use to prepare this setup. Here you can see that I've just marked out the breaks of structure that have occurred within this current trending move. So if we are to look at the market right now, what can we see? Well, we can see the demand zone has been retested, shifting us then into an uptrend, telling us that we probably will soon be ready to buy. And now what I really like here, and a word that you just heard me say, is the kind of inducement that we see. So when we talk about inducement, we are talking about areas where people are going to be pulled into the market early before the real trade is ready. And for this position, I see that inducement right here in this hourly or 30-minute demand zone. So how do we know that this is an inducement zone and not the zone that we want to buy from? Well, this comes down to liquidity. And when I'm talking about liquidity, I'm talking about equal highs or equal lows in the market. I'll stick a card here to take you to a video about liquidity if you have no idea what I'm talking about. But when we see equal highs in the market or equal lows in the market, we are expecting price to take those out, okay? And when we see these really clear demand zones, which look like the perfect place to buy from, very often they're not. They act more of as a trap to pull traders in, then stop them out, and then the real entry occurs from slightly lower down. So if we look at the price action here, under this candle and this candle here, we have these equal lows. Now, this is not the most clear liquidity, but I saw this ahead of time. Because I saw this ahead of time, it allowed me to get the really nice entry that me and my community got. I will show the live entry in a bit as well, so you know that I'm not hindsight trading. But I did actually share the basis for this idea on social media. And most people were telling me, nope, these equal lows will not hold. This is the zone to buy from. As it turns out, they were wrong, I was right about this position, and this was a clear case of the inducement. Most people are drawn to this zone for the buys, therefore the market is very likely to take that level out, fill into a lower region, and then begin the push away. So now I've gone a little bit lower to the 15-minute time frame because I want to assess the best possible area to put my orders on, okay? And just below the equal lows here, we can see that we have this kind of demand zone. So what we can do is actually grab a parallel channel tool and pull that across from this level down to the low. And as you'll now see, we have that demand zone marked on, sitting beneath the equal low liquidity that we just spoke about. If we go to the hourly, you will also see that this correlates quite nicely within the wick of this larger demand zone, which, by the way, is still imbalanced, as you can see. The high here does not meet the lows of these wicks here, leaving this as an open imbalance. And another thing I really like, which you should use as a step to get in the perfect trades, is the 4 hour. Okay, if we look at the 4 hour time frame, we can see that this demand zone here is still open. And this is the demand zone that correlates with the hourly and the 15-minute demands that we've just marked on. So now that we have our setup idea using the high time frame and the low time frame, what we can lead into now is step number 4. And that's going to be finding a high probability and high risk reward entry. If we compare high risk reward with high probability consistently, we are going to do very well. So what you could be doing for an entry in this example would be placing an order on, just like this, placing your stop loss below this zone, and then trading this upwards. Now, where would we look to trade this into? Well, if you remember, this is why it's so important to look at the high time frames, because it becomes clear that the market could lead all the way up into this area here. However, the one thing that is going to mess with this trade is the timing, because this was towards the end of the week. We are now looking at afternoon on Friday. And if you're anything like me, and you like to keep risk down and avoid gambling as much as possible, then you definitely won't want to be holding trades like this over the weekend. So what I actually did myself was wait for the markets to reopen. And once the market had reopened, I made my execution straight into the week after the spreads had died down. But this is how we formulate a high probability and high risk reward entry. We've used the inducement and the liquidity. We've used demand, and we've looked at the efficiency of the market to determine that this is the high probability area to get in. And we've used the high time frame structure and those kind of magnet areas with the imbalance and supply zones to kind of get a clear high probability trade, because now we understand the high time frame and the low time frame are both in agreement to give us a beautiful trade. So now it's time for step number 5. And step number 5 is the most simple of all, but one of the most difficult to actually apply. And this is going to be to allow your trade to run with patience and conviction in the position. Most of the time you are going to get slow movements. So you have to execute and manage with confidence and conviction. So now we can see that the trade started off very nicely. And then into the next day, it did pull down back to the entry, come very close to the entry before retesting demand and moving away again. And this is why the patience is so important, because this was a whole day of price action where all we actually ended up seeing was a reversal on the position, okay? But after that, price really did start to take off nicely, and it was around this point that me and my team got out of the position for just over 10R. So why did we get out early? Well, the reason we got out of this trade early was due to news. And this is why step 5 regarding the management of the trade is so important. Because when there is high impact news around a currency on a pair that we are trading, it can cause huge volatility. Sometimes that will go your way, sometimes it can turn your whole trade around. We'd been in this trade for 3 days at the time, so I figured, okay, now that we've filled this imbalance here, maybe we should just take the profits we have and get out. And the reason that we did that is because we had European central bank data coming up, and that is not something that we want to hold euro-based trades through. So this trade was closed by myself and my community within the supply zone for plus 10.5R. And I would personally say that that is a brilliant win. It only took a few days to play out, but it did end up giving us a beautiful profit. And because of the high conviction we had in the trade, due to the process I've laid out in this video, it was super easy to just let it run. That was my 5-step process to finding the perfect winning trades. What do you think? Did you learn something new in this video or not? Let me know in the comments below how you felt about the video. And if you enjoyed it, make sure you head over to my channel and subscribe, because I post educational videos there almost every single week. Now, before you go, make sure you check out the description. There's a bunch of interesting stuff in there, including a 70-minute free training, which is going to help you to improve your trading results, and a bunch of discounts for different trading softwares and prop firms as well. All in all, I hope you've enjoyed the video, and I hope that I provided you with even one gem of information that you can go away with and use to your advantage. Thank you for watching, thank you for your support, and I'll see you in the next video.